Good morning, traders. Today is January 17th, 2024. Today I just want to do a quick journal to let you guys know what's going on with my portfolio. And to let you know, I want to show you a real case of max loss while trading options. Today's topic is on AMD. What started this trade was I was doing what's called earning plays, where you know earnings is about to come out. There's a lot of unknown in the market based on earnings of a company, so you can play off this and leverage that uncertainty by selling premium. There's this concept called IV expansion. So typically, when there's unease in the market, there's a lot of the implied volatility expands, and you can leverage that fear in the market to collect premium. So in the Tasty platform, if you go into their watch list, there is a earnings tab, and it shows the all earnings, and then it has ones that's really being monitored by the Tasty platform. So any given time, you can pick on one of these, and then based on your criteria, which let me clear mine out here, you'll get a list of earnings where you can leverage any of these. Like, so for example, if you sort it by the earnings tab, you'll see here at the today, which is this is the 17th at night. This arrow here shows before market opens, right? And then anytime there's an arrow to the right, that shows at market close is when earnings comes out for any particular company that's coming out. So in the case of now, you have Citizens Financial, you have Charles Schwab, you have U.S. Bank Corp. All these came out today, right? So quite a few here, and then you have ones come out tomorrow. So here's an example of some that are in at 9:30 when the market opens. Earnings will come out before the market, or not necessarily 9:30. It might come out at 7, 8, 8:30. But the thought is it'll come out. The news will come out. They'll release the earnings, and then based on that earnings, it will show a change in the underlying. And so I played last in 2023. I did quite a few earning plays. Had a pretty good run. But in this case, AMD did not go as I predicted. So just so you can see here, I did take, unfortunately, for all intents and purposes, I took max loss. I wish I caught the trade live when I closed the trade yesterday. I actually closed it yesterday on the 16th, but I did want to record it while it was fresh. You see here, I have a realized loss of $720 of as of 2024, but I also took. I was still in the trade doing fourth quarter of last year, where by the end of the year I had already took about 1,100. And you're probably asking, like, why didn't I close the trade then? Well, it's because in trading options, you see here. Here's my max loss. It's basically a loss of $2,436. Ouch, that hurts, right? And so I've been in this trade ever since last year. I got in right at the earnings, or maybe the day before when earnings came out. When I say earnings, I'm talking about if you come here, you will see earning date, and right here is when the report came out. So for Q3, I think it is, or Q3 earnings, you see they reported on 31st of last year. This is when I got in the trade at end of day, like at the end of that day. The thought pattern was, if you look at the chart at the time, you'll see here it was trading at. So here is the Thinkorswim platform. I'm using a feature called on-demand trading. So I want to show you back in time what it looked like at the day that I was doing this. Now you see here, everything looked very red on the squeeze. Things were going down. Maybe a good case for a pullback, but my thought pattern was, okay, I'll I'll sell a call. I think earnings will be bad. Things will pull down some more. You can see here in the previous price action, AMD could go lower, right? So I'm thinking it'll come down here, maybe touch the 200 moving average. So that was my thought. My bias was the price would go down. So I'll sell an option, sell a call specifically, to where my bias is the price will go lower. At least that's what I was thinking. I went naked, right? So I came in. I was thinking maybe put in something around here. So let's get a line here. So maybe put something like right there, or maybe a little higher. Maybe sell that one. And then as long as it stays below this line, I will lock in profits, right? That was at least my thought. That's not how things worked out, but let me kind of replay things and let you see how it went down. So if you go back over here, you see that I did take a max loss of $2,426. Now, how did this happen? Well, my thought pattern was I would manage this trade, and if I manage it long enough, I will end up taking a small loss. That was my thought. So you see here, I bought my first call here right around end of day. So it was like right end of the day, 6 minutes before the end of the 31st. Earnings, in this case, earnings was going to come out at market close, right? So I wanted to get in right before the earnings came out, and then the next day, which would be November 1st, I would get out the position, lock in my profits. At least that was the thought, right? So if you look at the chart now, I'm going to do what's called on-demand trading, so we can real-time play this back out. But if you look here, I'm at the same point in time. Let's just go to the end of the day. So it'll be end of the day would be about 15 around this time. So 15 military time. So 15:21. You see the stock price is around 96.18. Earnings is about to come out shortly. So I went in for a look at that chart, and I decided I wanted to do a call position. I ended up getting the December 15th 120. I was thinking like something like right here. Stay right here, lock in some premium. So we go over here. Let's wait for the option chain to come up. I end up doing a let's see, will it let me go back in time here? January, February. All right, so if you come here, you see, so I had to put AMD there, and then here I bought the 15th, so 45 days out. And when I was looking at here, I was trying to look at the premium, so I figured the 120, go naked, collect about 100 and some. So if you look at what I got filled at, I end up collecting $1.14. So I got a naked call, $1.14. So if I come over here, for here, so that's about right. See, so I might not get exactly right, but I'll click on the bid. You see, I'll click 113. I'm going to submit the order. You see, this order is going to infinitely. So I'm gonna put up buying power is about $1,400, about $1,500. Collect 113. Let's take it. So you see, I got filled. So I'm good there. We got the trade. We're in the trade. Let's see. And we're good to go, right? So now let's monitor and kind of see how this will play itself out, right? So if we go to the AMD positions, I'll close this out. And you see I got an active AMD here. No profits or anything left, but let's fast forward time to see where we're going next. So next up, I came in this thing, and November 6th, things were going against me. So let's see how that goes. This is right in the morning at 9:42. So let's fast forward. November the 6th. All right, so we see here, I'm down. Right as of right now, I'm down probably like $250, right? Not the end of the world. And so if I go over here, AMD, and you see right now my delta is creeping up. I have a 36 delta, not the end of the world, creeping up on me. So I was like, all right, well, this is getting a little too close. Let me move this thing out. right? So this is when you call roll your position. The thought is you'll move up and out, which means you'll move up, further up from your current position, right? So I got a 120, so maybe I'll go up maybe to like a 125, and then out in time, and then that together should result in a credit, right? So which means you'll close the current position and simultaneously open a new position at the same time, which means you end up collecting a credit. So let's do that. So I'm going to go to my position here. I'm in trouble, right? So I'm going to right click and I'm going to create a roll, which is not really a calendar, but we're going to roll this thing. But in this platform, this is the only way I can do this. And I want to roll, which means I'm going to buy back the one that I have, and then I'm going to roll it out. So let's roll it out to the January 19th, 25, right? That will result in another credit. So this is, you see, that's a credit. So that's the good thing. All right, so I'm going to roll this out. And if you look on the chain, let's say I'm on 36, but what I want to do is I want to go out further and collect more money. So roll it out. And then hopefully we'll get filled. So it's working it. It's working it. Let's fast forward and hope it fills. And we got filled. Great. So now, if we look at the position, now I'm sitting on January. It's still at 33 deltas, but I got more credit. You know, we're looking pretty good. So haven't I collected money. I'm in a better position. There's no way it's going to hit me though. But if you look at the chart, you see how it ripped up after earnings. It ripped up, pulled back a little bit, but it ripped up. It's now sitting at 112. Now I'm in trouble, right? Because I'm on the wrong side of the trade. Now what I could have did was close the position, but instead I figured like it can't get no more than like a 140, right? So I'm gonna ride this thing out. So next I end up coming behind it and saying, all right, 4 days later, I did again. So let's go over here. So if you look at my order chain here from Tasty, you see on the 10th, I rolled again. I did another roll for more credit. And I want to go, but the thought process, you want to keep rolling up, staying away from all this price action, right? So again, here we go. So let me go to, now it's the 6th, the 10th, it's like 4 days later. All right, so now we're about the same. So you see here, AMD just kept ripping. We're now at 119 on the 10th around lunchtime. This thing just keeps ripping up. Now, if you look at, in hindsight, if you look at the past price action of AMD, you see it got up to, in the past, 132, and the way over here it got to 164. So it's possible, but I was like, nah, it's going to eventually, sell off and it'll go back down. But the entire market, if you look over here, it's just been ripping up through the roof. Green every day in 2023. So what did I do? Okay, I'm going to manage my trade. I'm going to roll up and out more, right? So I'm currently sitting on let's see. I'm at 45 deltas, so I'm getting in trouble. 25. So the thought pattern now is, again, let's roll up and out. So maybe we can roll to the 130s. So I need to find another credit. So what I'll do is roll again. So I'm gonna go here. I'm gonna roll again. Like again, this is not how you do it in the Tasty platform, but for this example, I'm gonna show you with on-demand trading. So I'm clicking this, and at this point on the 10th, I rolled and got a 130 on March. So I'm going further out to March. So I can find it, March, and then on the 30th, roll up a little bit more, try to get safe, stay away from this price action. You see it's another credit, another nice credit, like 200 some bucks right here. It's probably a little high. I probably won't get this much, but I think I end up getting. I don't remember getting this much on this trade. Yes, it is. I got about 211, so that's about right. I end up getting a little bit more. So here we go. Got filled, boom, done. So now we're sitting good again. So Now I'm down just a few dollars. No harm done. I'm now sitting on a March. Had a January, now I got a March. Did this on the 10th. No worries, right? So if you collapse this down, I'm now on a March. Right here, 44 deltas is not where what you want to be, but at least I'm away from the price action. Current stop price is 119. I'm sitting on a 130. There's no way I'll keep ripping, right? At least that was my thought. You see the chart right there? Well, let's fast forward to the next point in time that I did the next trade, which was on the 14th of November. So I'm going over here. Let's see. I don't remember what time this was. I think I got filled around the 10. About 10 a.m. around that area. All right, so on this day, you see we're at 121. The market just refuses. If you look at market's still ripping green. You know, the Nasdaq's up 300 handles, 500 handles on Dow Jones. The market's just insane right now in November, right, going into the holidays. Obviously, you see a pattern here where it's going to definitely hit this top on around 132. Around this day, let's see, around this time, you know, I wanted to move to like 140 just to be safe. Because I'm looking at the chart here, I'm just like 140. There's no way it'll go up here. It'll fall back down. So let's go find us a position here. So I'm at 47 deltas. So let's move this thing out. So again, I'm going to roll. And this time I'm going to 140, and then of course we need to find a credit. So in order to find a credit, we need to move out, up and out. So we're going to go to June. Let's go to June. So June, I think it was, yeah, June. June 2014, 140. That should give me a credit. Yep, 160 around that area. Look, good stuff. Okay, so November 14th, just making sure we're good. 157, so that's good. So I think I got filled for 157. Hit go, fill. We got filled instantly. Boom. So again, the strategy for managing naked options, or even well, I'm not gonna say strangle. That's a different strategy. Naked options, you want to go out, up and out, right? So go over here. I'm now good to go. That worked like no problems. Chart is still ripping up. We good, right? So now let's roll out more. Let's move this thing out some more. So let's go to December. So December December the 11th is the next time I had to adjust my position. I don't remember what time it was. I think it's right out the gate. Around 11, so let's go to 11. Okay. All right, so now, as you see, we busted right through that 132, just like we predicted, right? And I'm still in trouble. This position's still in trouble. If you look at where we are, I'm down. Now we're down like almost $400 versus before we were like 250. So not the end of the world. Still managing the trade. All right, so now if we go here, you'll see I'm no longer have the March. I'm scrolling down. I'm sitting on this June. And right here again, you probably notice the pattern that I see is my deltas are slowly going up. Now I'm at 52 deltas. So this is definitely very aggressive. Going against me, not in a position that I would want to be in. But it's ripping up here, right? So we gotta play defense. Like this delta's getting too high. So we need to roll out again, right? We need to roll out again. So what we'll do is see, this was on December the this is December the 11th. The 11th. So yeah, so we're gonna roll this out to September. All right, so let's go to September. If I remember correctly, let's just double check and look. Yeah, on the 11th, around 11, we rolled out and got a 145. All right, so let's do that. So I'm gonna go here, roll, do a roll sell 45. Let's go to September. September 45. That's another credit, right? Another credit here. And yeah, we're going to shut this old over, roll this old out, and get that filled. All right, now we got that filled, so we're good here. So now if you look, we are sitting on we're on a September 145, and we're good to go, right? So that if we look at the overall position, again, but now one thing to note that I haven't really talked about yet, but if you really look here, if you remember when we first started this position, it required a $1,400 buying power to hold this position. But if you look now at my buying power effect, you see now this thing is requiring $4,000 to keep the position on. This is something I need you guys, if you get interested in doing option trading and you decide to do undefined risk trades, know there is a different margin or capital requirement to keep on the position, right? The number that you get, and this is something I had to learn when you start doing option trading, especially if you do undefined risk. If you're going to do undefined risk, the capital requirement will change based on market conditions, right? So you need to make sure you have enough buying power in your account to support any open positions that you currently have. And this is what, in the end, caused me to have a max loss. But we'll get there. Let's get there. So we just got that filled. This is creeping up. I'm losing money. But I'm in these long dated options, right? So plenty of time for it to be right. You look now, this thing expires 284 days from now. So there's a lot that could happen between now and September of 2024. The current date is December of 2023. So, I got plenty of time to be right. I'm not in the money, right? The price action is nowhere near hitting me. This is a 132. Current stock price is 132. I'm sitting on a 145. There's no way, right? I just gotta, stay the course, right? Stay the course. Right, so let's fast forward and get to the next day that I did some moves. I think it was on the 14th. 14th is next here. All right. All right, you see here, the market keeps ripping. This thing's almost at, AMD is almost at 140. The market's not open yet, so let me fast forward here a little bit. On this day, I think the market just opened good, and I was already panicking, and it's time to make some moves, right? So you see here, boom, market's now opened. Market's open. We're now at 140. I'm in trouble. I'm in trouble again, right? This is now the 14th. So it's time to now get more aggressive. Let's move out and up again. So if you look at my option chain, I'm already sitting here at September 2024. This is currently December of 2023. What do you do now? The market is still ripping. This is insane, right? So if you go over here, go down to my right, I'm almost about to be, hit. I'm at 145. Market's at 140. This is not good. It's at 58 deltas. It's time to move. Right, let's move the sucker again. So again, on the 14th, I rolled out to the 2025 155s. Right, so let's do that. So I'm going to come here, roll this sucker out again. It's all about playing defense here. So now I'm going to roll to, I'm already in January, which is insane. And now I'm going to go to September of 2025, which is way out. I think it's, I'm on September. Yeah. So this is 2024. September 2024. Go to January 2025, and then find the 55s. 55. Boom. There you go. That give me a credit. See a credit of 125. Great. So you see, this will be another credit 125. No buying power effect because I'm just rolling. But there is going to be a cost, right? So you go. Let's get that filled. All right, we are filled. We are for the win. We're good. Okay, so now let's look at this chart one more time. You see this thing is absolutely ripping up. What could go wrong now, right? So now let's move to the next time. So the next thing I had to do was got to the 28th of December, right? This is where I rolled up even more to like 165 on the 28th. So let's roll to the 28th. All right, so now the market's open. This thing is at 146, almost 150 for AMD. Keep in mind, remember, we were at 98 weeks ago, and it's been ripping ever since. This is a bad thing when you're on a negative option and it's going against you. But I'm still playing defense. I'm hopeful everything's good. Now, one thing to notice, if you look over here at buying power, right? The capital requirement is creeping up. This is the problem with doing naked options, right? I'm not saying you shouldn't. I'm just saying be aware that the requirement to keep the sucker open, if you're not going to close it, it's going to change. And if you don't have enough money in your account, you get what's called a margin call, where they you're either required to put more money in the account to keep the position open, or you gotta take the loss. You gotta close it and take all the loss that comes with this position. So let's walk this through. So now, so I'm still over here. I'm sitting on at this point, I'm sitting on a January 2025 position. I'm at 50 at deltas. I'm on 155. AMD won't quit coming at me, right? So let's get a little bit more aggressive. Let's go to a 165. So I'm going to roll that out. I'm going to go from a January to a June. So let's go there. So here, right click, roll. You see June's already picked for me, so I just go to 65 here. Another credit. Maybe go a little lower. I got like 7, something like that. Let's get it filled, and it got filled immediately. Boom. So we got filled for 197. These are not actual numbers. It's one something, but I just want to get the point across to you guys, right? So now we're good. We're good there. And that was it. When's the holiday? This is after Christmas. Now let's fast forward to the day I took max loss, right? So now if you fast forward to 2024, and this is my last trade, y'all. This is my last trade I did. It was I don't even know. It's not available yet, so I can't really do it. Unfortunately, I can't do it. But on the 16th, I looked at my Tasty Trade account. I looked at my account on the 16th, and the problem was on my positions, it showed that my buying power was like $3 or like a negative $50. So that right there told me I had to close the position, because I can't keep fighting this tide. I can't keep fighting this insanity of this stock just ripping up through the moon. Like it just ripped. At some point, it's going to pull back. It's going to pull back and drop all the way back down to like low hundreds. But again, the problem is like my account, this particular account, I don't have a lot of buying power. Like I had like negative, $100. The last thing you want to do is throw more money at a loser, right? So yeah, all that to say, I end up taking a max loss of like $2,000. I'm out of the position. I did close it, and I just want to give you guys a hit up, like, trade naked, undefined risk, with in mind that either you take a loss if it's going against you, and live to trade another day, or make sure you got plenty of buying power, plenty of capital in your account, because I never once in this entire position did it ever come in the money. Like I sold it out of the money. Every last one of these stayed out of the money the entire time. It's just when things are ripping against you, which this is just unheard of. If it rips against you like this, it's gonna keep increasing the requirement for you to keep the position open, because it's naked. and it could bite you. Like you could be forced to have no choice but to close it because you're not going to have enough capital to hold it open. So just keep that in mind. Me personally, I probably won't trade AMD anymore with a naked option. Maybe do a credit spread or do something defined because this stock, unfortunately, will just rip. And ones like it, they're not a good trading vehicle if you're on the wrong side of it. Like if I had put a put on, sold a put, this would have been perfect, but an easy winner. But because I was on the wrong side of this trade. In hindsight, I probably should have got it a long time ago. But yeah, so hope this video added value to you guys. Just wanted to let you see for yourselves like what a max loss looks like. If you put in an order and it says there's the requirement, like for example, if I come right now and I trade AMD and you see earnings is coming up, later this month. And let's say I go to 45, very similar circumstance, right? And I come in here and do, it's ripping up, and I'm thinking like, there's no way it'll get to like 170, and I come in here and click, I could get $600 right now, but you see the capital requirement is exactly what happened to me. Like I lost this $2,000, right? The requirement for this naked option is $2,225, and if you look, that's pretty much what I lost. Pretty close. $2,400 is what I lost. So it's possible to lose it all. So just keep that in mind. But more to come, guys. I hope this was valuable to you. As always, nothing's changed. I still love trading. We got plenty of other strategies that I'm going to talk about to come. Hope you enjoyed it. And as always, happy trading. Take care.